If you've looked at Rocket Lab's stock chart recently, you've probably had the same reaction most people did. What on earth happened here? This stock didn't just go up, it tried to escape Earth's gravity. After spending years as a forgotten SPAC orphan, Rocket Lab almost tripled in 2025, with a huge chunk of that move compressed into just a few weeks. Behind that move, you've got a massive missile defense satellite contract worth around $800 million, a record year of launches, and a company that is quietly trying to go from cute rocket to mini space and defense prime. So today, we're going to unpack the truth behind Rocket Lab, what it actually does, why the stock has exploded, what the real risks are, and how I'd think about it inside a sane, long-term portfolio. How Rocket Lab went from SPAC trash to mini prime. Rocket Lab started in New Zealand in 2006 and later moved its headquarters to the US. It focuses on putting small satellites into orbit and building the hardware that makes those satellites actually work. They went public in 2021 through a SPAC. Quick translation. A SPAC is a special purpose acquisition company, basically a publicly listed shell that merges with a private company to take it public without a traditional IPO. It was the hot thing in 2020-2021. Then most of them crashed. Rocket Lab's stock followed the script. Big story, early hype, then gravity. At that point, revenue was small, losses were large. Their next big rocket, Neutron, was essentially a slide deck, and the market threw them into the junk drawer labeled SPACs will ignore for a while. But unlike a lot of SPAC darlings, Rocket Lab actually did something useful with the money. They went on a quiet acquisition spree and built out a full-stack space company. They bought companies that make satellite components, separation systems, solar power for spacecraft, and flight software. That turned Rocket Lab from the company that launches other people's satellites into the company that can build the satellite, its power system, its parts, and then launch it. So the first truth is this. While the stock price was stuck in SPAC purgatory, the underlying business was slowly upgrading from single-product rocket company to vertically integrated space and satellite contractor. That set the stage. Then 2025 lit the fuse. Why the stock suddenly went vertical. The recent face-melting move in RKLB didn't come from nowhere. First, the headliner. Rocket Lab won the biggest contract in its history, worth roughly $800 million, to build 18 missile-tracking satellites for the US government. Not as a sidekick, as the prime contractor. Prime contractor just means they're the main company responsible for delivering the project. They can subcontract pieces out, but they're the ones holding the main contract and the main responsibility. These satellites are part of a broader missile defense network. The US is building a constellation of satellites in low Earth orbit. That's the relatively close band of space, a few hundred to a couple thousand kilometers above Earth, to detect and track ballistic and hypersonic missiles. Rocket Lab also already had another big government deal, around $500 million, for a related satellite constellation. So now they're not just the rocket guys. They're one of the small club of companies providing eyes and ears for US missile defense. At the same time, 2025 was a record operational year. 21 successful Electron launches, a 100% success rate for the year, and a growing list of customers who now see them as a reliable small launch provider, not a science experiment. Financially, their most recent quarters show quarterly revenue in the mid-hundreds of millions, growing strongly year over year. A backlog of around $1.1 billion of signed work. Backlog is simply work we've already sold, but haven't done yet. It's contracts and orders that will turn into future revenue if they deliver. On top of that, they raised cash earlier in the year and now sit on roughly $1 billion in liquidity. Existing shareholders were diluted, yes, but the runway for their big projects got much longer. Put all of that together. Record launches, record revenue, $1 billion plus backlog, multi-$100 million defense contracts. And suddenly, analysts and funds woke up and started calling Rocket Lab a new space prime, meaning a smaller, more agile version of the old-school defense giants. That's why the stock chart looks insane. The market finally noticed the story had upgraded. But to understand if this is real or just temporary FOMO, we need to unpack what Rocket Lab actually is right now. What Rocket Lab actually does today. Think of Rocket Lab as two businesses under one roof. Launch and space systems. Launch is the part you know from the cool videos. Their main rocket is Electron, a small lift orbital rocket designed to put smaller satellites into specific orbits. Instead of cramming your satellite into a rideshare on a giant rocket, you get a more customized ride. In 2025, Electron launched 21 times with no failures. That matters a lot. In space, reliability is a language. If you blow up payloads, you're done. If you keep delivering, governments and defense agencies start to treat you as serious infrastructure, not a startup. Then there's Neutron, their next-generation rocket. Neutron is a medium-lift, partially reusable rocket. Think of it as trying to move into the same weight class as SpaceX's Falcon 9, but with its own design twist. A clamshell fairing that opens and closes and a reusable first stage. If it works, it could serve constellations, national security launches, and bigger commercial payloads. Originally, Neutron was supposed to fly earlier. Now the first launch is targeted for mid-2026. This is completely normal in rocketry, but it's important. Neutron is a big bet. Late or failed Neutron is bad news. Working Neutron is a massive unlock. Space systems is where a lot of the real money is hiding. Here, Rocket Lab designs and builds satellite buses, the chassis of a satellite, power systems and solar arrays, attitude control and reaction wheels, separation systems, and full spacecraft from top to bottom. This is where those big missile tracking satellites live. It's also the segment that has been growing the fastest. So when you buy RKLB today, you're not just buying a rocket launch company. You're buying a vertically integrated space contractor that makes rockets, satellites, and the parts that keep them alive in orbit. The defense turn, from cool rockets to national security. Now, let's talk about the defense angle, because that's a big part of why institutions suddenly care. The US is building a missile defense architecture that relies on lots of small satellites in low Earth orbit. Instead of a handful of giant, expensive birds in high orbit, they want a mesh of many satellites. That network can track missiles and hypersonic weapons, and it's harder to take out because there are so many nodes. Rocket Lab is now one of the companies actually building those nodes. First, they won a contract to build 18 satellites for a secure communications and data relay constellation. Then they won this newer, roughly $800 million contract to build 18 missile tracking satellites. For investors, that means this isn't just launch a payload, get paid once, good luck. These are multi-year, program-level contracts tied directly to defense strategy. If Rocket Lab executes well, it doesn't just collect this one check. It earns a reputation as a trusted builder for national security space. That can mean upgrades, follow-on tranches, and new programs over time. That's how the old giants like Lockheed and Northrop grew, one program at a time, over years. Rocket Lab is trying to play that game in the new space world. Neutron, the big swing. Now, we have to be honest about Neutron, because it's the big swing that can make the story incredible or painful. Neutron is supposed to be medium lift, partially reusable, cheaper to operate per kilogram than legacy rockets, a competitor for both commercial constellation launches and government missions. If Neutron works, Rocket Lab moves into a different league. They can launch their own satellites, government payloads, and commercial customers on a rocket they control end-to-end. That means more revenue, better margins, and more leverage over their own schedule and pricing. If Neutron is seriously late, too expensive, or has early failures, it burns through that billion-dollar cash pile. It delays the path to profitability. It potentially forces more share dilution or slower growth. So Neutron is the fork in the road. This is a bet on engineering execution, not just a contract win. The numbers, growth, backlog, and the profit problem. Let's talk numbers without turning this into an accounting lecture. Revenue has jumped from tens of millions a few years ago to hundreds of millions per year now. Recent quarters have shown revenue in the mid-hundreds of millions, growing around 40–50% year over year. Their backlog, again, that signed work that hasn't been done yet, is around $1.1 billion and rising as these new defense contracts land. Launch cadence is at a record. 21 missions in a single year, all successful. They've raised cash and now have around $1 billion in liquidity to fund Neutron, expand manufacturing, and execute on their backlog. The catch: Rocket Lab still isn't profitable. They're still reporting operating losses and negative EBITDA. Quick translation: EBITDA is earnings before interest, taxes, depreciation, and amortization. It's a way of saying, are we making money from the core business before all the accounting and financing stuff? Right now, the answer is still not yet. That's not surprising in a company building rockets, factories, and satellites all at once, but it matters for valuation. So, if we strip it down, fast revenue growth, big backlog, strong cash position, real defense contracts, but also ongoing losses, heavy capital spending, and a lot of future success already priced in after a huge run-up in the stock. The bull case versus the bear case. Let's lay out both sides in human language. The bull case is, Rocket Lab has graduated from SPAC rocket toy to real space and defense contractor. It has proven Electron as a reliable small launcher, built a fast-growing space systems business, and muscled its way into serious U.S. defense programs. If Neutron works, they become one of the only companies on Earth that can both launch and build satellites at scale for both commercial and military customers. In that world, today's valuation can make sense over a 5 to 10 year horizon. The bear case is, the stock already exploded. A lot of that future success is baked in. Neutron is still unproven. Government contracts depend on politics and budgets. This is a capital-intensive business that can absolutely disappoint, and when sentiment turns on high-growth, unprofitable names, the drawdowns are brutal. In that world, RKLB is a trading sardine, fun to watch, painful to hold through the wrong part of the cycle. How I'd think about RKLB in a portfolio. First, I'd treat Rocket Lab as a satellite position, not a core holding. That means maybe 1 to 3% of a diversified portfolio for most people, not 20%. This is a high beta, high volatility bet on space and defense, not your retirement foundation. Second, I would not chase the biggest green candle on the chart. When a stock has already tripled and just spiked again on news, sharp pullbacks are normal. I'd rather scale in slowly or wait for volatility to cool than slam a market order at the peak of FOMO. Third, I'd pair it with boring, stable exposure to the same theme. Broad market ETFs, bigger aerospace and defense names, or diversified thematic funds. Let Rocket Lab be the spicy slice of your space and defense allocation, not the only ingredient. And finally, I'd set a time horizon that matches the story. If you buy RKLB, you are implicitly betting on what this company looks like in 5 to 10 years. Is Neutron flying regularly? Are they still winning defense work? Is Electron still launching reliably? Are they actually profitable? If your time horizon is next Thursday, this probably isn't for you. So, what's the truth behind Rocket Lab? It's not just a cute rocket company anymore. It's a fast-growing, still unprofitable, vertically integrated space and defense player that just muscled its way into the missile defense business and proved it can launch reliably. It has real growth, real contracts, real potential, and very real execution risk, all wrapped in a stock chart that will absolutely punish anyone who forgets that. If you decide to get involved, treat it like what it is. A high-risk, high-reward satellite position in your portfolio, not a substitute for your broad, boring compounding core.